Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Hey everybody, Cowboy here. Starting just a few minutes early today, being Wednesday, CPI day. Today being the 11th of June. We usually start at 8:30 a.m. EST, but we're going to start at 8:25. And the CPI data drops, and it drops in about 4 minutes. So we want to see on the charts how that's affected. Interesting movements in the charts, though, prior to this, because, of course, I was watching, and there's this big weird spike. It must have been a news spike of some kind, and I'm watching the USD JPY because that is going to be a bit analogous to the NASDAQ. NASDAQ, of course, it also had the same kind of movement. So if I flash back and forth between USD, JPY, and NASDAQ, you'll see it. But this was at 6:04 a.m. So there some kind of news hit. I don't know what it was. Maybe if I flip real quick, you got a couple of minutes left. Let me see if there's something that we can see on Zero Hedge as to what headline caused everything to kind of flash. This was at 6:25. So futures drop after U.S.-China trade talks fall flat. So maybe it was this. It was only just like 2 minutes ago. Maybe that's what happened there. See if futures fall flat, or they drop, and it was just a few minutes ago. So what would that look like on the charts? Well, in this case, the USD JPY went up, dollar got stronger. Yeah, that would make a little bit of sense, right? I guess. I mean, the NASDAQ kind of fluctuated. Interesting that we should have this problem with the China trade deal right before the CPI comes out, right? Yeah, you know what I mean? It's kind of like, okay, hey guys, let's put the China news on pause so we can make all the money we can on the CPI. And then as soon as the CPI and all that energy burns out, we'll bring the China trade talks right back online. That's how I see it, right? So we'll keep it here for a moment. We got a couple minutes yet left. We have a few people watching. If you guys have questions, go ahead and leave a comment, right? Quick flash to Bitcoin. Bitcoin hanging out at 109. A little bit of a higher time frame look here. Look, Bitcoin attempted to reclaim its high, right? So there's a big bounce right as it bounced off of 100,000 and went all the way up to 110,000. So far, it could go either way, right? It's just kind of flagging up here, or it looks like it's about to flag. I don't know if we're quite there yet, but this was a prior area where price kind of wiggled around before it went down. So if price does head down, this was an attempt to reclaim, and the bulls blew their wad, or they will reclaim. So one or the other, right? Or none. It could just sit there and float in that area, right? Okay, so we're getting down to it here. Let me go to the 1 minute time frame, and we'll just see how how everything reacts. And I'm going to have the actual data come up on a different screen, but we're coming down to it here to be any second here. Looks like right now USD popping up, NASDAQ kind of popping up. Okay, okay, markets are moving, especially in the FX market. Woo, look at that. Okay, so JPY got strong, USD got weak. Must be a cool print. Let me do a little bit of a refresh. No, okay, looking at the wrong screen here. Okay, cool print. We got a cool print. All right, substantially cool. Okay, so this may look, usually when you get a cool print, what that means is that the CPI came out a little bit lower than normal. It's a big wick. Remember, the futures market is not open yet, or this is the futures market. The NASDAQ stock market's not open yet. Bitcoin should be seeing a spike. Yep, see, everything is going to spike up now, right? And it's going to probably do this for a lot of today because it was a substantially cool print. Quick flash to the data. 0.1 where it should be 0.3, or I should say the core CPI was estimated at 0.3, came out at 0.1. CPI was estimated at 0.2, came out at 0.1. When I did my show, and the year over year is a little bit lower than expected. The first two numbers I mentioned are month over month. So what does all that mean? What that means is that the inflation data came out a little lower than expected, right? So why does that cause the markets to push up? In this case, you're going to see the dollar perceivably get weaker while the Japanese yen should be getting weaker, but the dollar is going to get weaker quicker. So you probably would rather pay attention to like EU or USD for how the stock market might operate. Now, the reason the stock market and say something like Bitcoin would spike up like this, because look, Bitcoin's going up, this is a zoomed in look that looks like a big green candle. It's not that big. If you zoom out, it's really just kind of a not that big of a deal, but it's still bullish, right? But yeah, you zoom all the way out to like the daily, you barely even notice it. But it is upward pressure. So if I looked at like the 30-minute chart on Bitcoin, it would be noticeable a little more, right? Just like a nice little candle up. You see that? But Bitcoin was already bullish, so it might just kind of be what tips the scales and causes this to move up. NASDAQ, you'll see it. I had this breaking out anyway. This pattern on NASDAQ was bullish, kind of showing that the market expected a cool print. It hasn't broken above here yet, properly drawn. Having zoomed in here, I might even have this look like this. But the reality is that the market was setting up, the stock market was setting up for a move up, which would mean that crypto would move up as well, but crypto was already moving up. So all of that to say that the NASDAQ might try to reclaim its all-time high based on this data. And why is it? I know I asked that earlier. Why would it be that just because the CPI print was cool that the market might rise? Well, that is because, look, we've been in a quote-unquote high rate kind of condition for a while. Powell's kept the rates at what is a comparatively high interest rate. Now, the rates haven't changed. We just got the CPI data. But what Powell would need, Jerome Powell, the chairman of the Federal Reserve that decides the price of money, right? The interest rate at which money is loaned out, right? So the entirety of money in the US and around the world is pretty much debt. It's made up of debt. It's not backed by anything. It's just made up of debt. And so when you lower the interest rate, that means money becomes cheaper. Because all money is debt, when you lower the interest rate, there's more money to go around. It doesn't mean that there's more wealth. It just means that there's more money. And when there's more money to go around, more wealth will flow into places like the stock market, and the stock market will go up. Now, the reason that money has been comparatively expensive is because there was inflation. And one of the things that the Fed needs to do, one of the things of the two that is their job, is to keep inflation from going too high. So what do? They raise the interest rate so money becomes expensive. And when money becomes expensive, less money goes into the markets, and therefore markets kind of fall. You see a little bit of either either deflation or disinflation, the opposite, or the slowing down of inflation. Well, now that we've seen inflation have a cool print, where the numbers are below the expected inflation, Jerome Powell is starting to have the kind of data he needs to justify a rate cut. And when you have a rate cut, money becomes less expensive. And when money becomes less expensive, people are more willing to borrow it to invest. And then the markets go up. And that is the formula. This is why you may end up seeing the markets rise. We also have V the Gorilla in the room. How are you, sir? You're on mute, V.
Doing good, man. Hanging in there. Beautiful morning.
Nice. Yeah, we just had the CPI print come out. And if I zoom in, you'll notice that the markets are reacting in a very positive way. You're getting, a bit of a move up, if you will. Let's go. You got to zoom in pretty close because the NASDAQ's not, the stock market's not open yet. So you're just kind of seeing a pop up in the NASDAQ. Bitcoin made its move up here. This is on the 1 minute chart. Don't get too excited. It's just a little bit of a pop up. If you zoom out, you barely even notice it. But I was explaining the mechanism, why a cool CPI print would cause expectations of a rate cut and why that would push money into the market. So that's what we were just talking about. And I had just finished explaining that. Very, very evident here on the EUR-USD, right? That's a very evident look right there. That big move up. This is on the 30-minute chart too. This is a substantial move up on the euro. Now, the thing about the euro versus the dollar is I'm convinced this is a bit of a false move. It's been going on for months now. If I zoom all the way out to like the weekly chart, going back to really, I'd say March, you're getting this massive move up in the euro. But the Europeans have been cutting their rates for a long time while the US has not. So the question is, why would the euro be going up when their rates are going down against the dollar? That doesn't make any sense. And indeed, it does not make sense from that standpoint. But the reality is there is a bond rate arbitrage trade going on. So, and that is essentially making actually things financially very tough on the Europeans. And they're having to borrow from who knows where to make that work. Looks like I called this right. Wow. Man, I drew this. When did I draw this? You know what? No, I can't. I don't. I don't know. Did I draw this like? Am I this precise? I doubt it. I doubt I'm this precise. If I drew this like this, that's like fucking, excuse my language, that's witchcraft right there. Gold itself is actually moving up a bit. Interesting. But you know, there's a lot of geopolitical tensions. And here's an interesting thing, V. Prior to the CPI coming out, there was this like a weird movement in the market, and I'll show it to you. Now, obviously, this is USD JPY, USD getting weak due to the things we just all talked about. This is not even the USD getting weak. It's people selling it off, assuming that it's going to get weak, assuming there's going to be a rate cut due to the cool CPI data. But right before, because I've been watching, there's this weird movement in the market right before, right here. And at that time, this green wick was a pretty big, weird wick. And funny that should happen right when the news came out right beforehand, saying that the China U.S. trade talks fell flat right before CPI. Yeah. So isn't that funny? I don't know, man. Seems like they're playing games to me. They're just messing around. Here's the thing about these events: like they're used to push the markets around so people can make money. And right now, they're just milking it. They're milking every opportunity they can get, whether it's a CPI or China trade talks. And so, and this is nothing new. This is just how it's always been. Where, USD JPY is wild, no doubt. It's always been this way. These are markets. The people who make policy know what's going to happen next, and they'll do it very openly through the stock market and Congress, because apparently there's no rule against inside trading if you're a congressperson, especially if you're part of, say, the Pelosi crime family. But at the same time, this kind of crap right here, they know what's going to happen before it happens. I bet you a bunch of people got their shorts on, but like for the USD JPY. But this is why it's dangerous to try and trade the news, because even if you got that data, look what happened to this. Before it went down, it wicked up. So a lot of people, what they did was they got their shorts on, right? Because even in my report yesterday, in the video, the live video, said expect the unexpected, and I did say that we're looking at a possible cool print, maybe slightly cool, and I called that pretty much dead nuts on. But even those who went short, look what happened. They got wicked out before they went short. Price spiked up through probably a lot of people's stop losses. And, a lot of gamblers probably got knocked out of their trades, which is why I don't mess around with the news. But as this unfolds, as the market begins to digest this, you better believe I'll be taking advantage of that volatility. And we are going to jump over to the private live lab to do so. But before we do that, Via the Gorilla, just wanted to give you a chance to weigh in on anything that we wanted to share with more of the general public while we're still on YouTube.
Not at the moment. I will have some stuff tomorrow. Maybe I'll give it a little bit of the juicy tidbits to the public and then make an official drip for the insiders.
Nice. Okay. Let's see here. Yeah. Okay. So you're talking about doing that tomorrow.
Yeah.
Nice. Okay, so a little tomorrow drips day. So that's one thing we do over at Algo Factory. We do a few things. What we do is we teach people how to predict where price is going to go. All the stuff you see on the screen, we can use that data to predict price movement. And anytime you can predict price movement, what you can do is extract money from the markets. And when you can do that in a predictive, in a stable, predictable fashion, you can take that money and put it into whatever you want, whether that be crypto, real estate, gold, whatever your favorite thing to invest in is. That's how you do that. Now, there's a lot of people who, they want to, they want to trade crypto. Good luck with that. It's extremely hard to trade. I used to trade it all the time. Like in 2017, it was easy. Just go long, right? Well, not so much anymore. Like you have moments when you can do that, but a market like forex is actually rather predictable if you know how to build an algo, and then you can take your forex profits, put it right into crypto, and then you just kind of do that in a very predictable fashion, like most people would do with their paycheck. They buy a little crypto every week. Well, if you are willing to take the time to build an algo, which is not hard to do, it's just a trading method. You don't have to know how to code any kind of crap like that. And you can extract money regularly from the markets, put it into whatever you want. And even if you have a 9 to 5, you can trade on a time frame that works for you. You can just spend a few hours a week doing it. As a matter of fact, if you want to get a taste of it, you see on the bottom of the screen right there, it says get your free algo, links in the description. Go there, get your free algo. Give us your, I don't care, real, fake name, whatever, email address. You get the algo immediately, but you'll also be on a mailing list where you can learn more about what we do. In the meantime, via the Gorilla, can you please get us over to the private live lab?
Yeah, absolutely. Thank you guys for listening in. We'll be back tomorrow. Keep it locked and loaded right here at algofactory.tech.